Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Wednesday, June 23rd, 2010. This morning we're talking about the Bank of England was not unanimous. Now, minutes were released from the Bank of England's rate policy meeting, and it showed that they were not unanimous to keep rates unchanged at 0.5%. This is the first time that happened in nearly 7 months, and the lone dissenting vote was because of concerns of inflation. Now, CPI data in the UK has been outside the targeted band that the B of E sets up, but their expectation is that it's going to fall back in line. Well, the lone dissenter is saying, well, hey, wait a second, maybe that's not going to be the case. Maybe we've got decent growth going on here, and that could exceed expectations as well. So what we're seeing here is we're seeing some pound strength. Looking here quickly at the pound dollar, just a nice little uptrend happening. Up, down, moving back towards 150. Now, this comes a day after the government announced their emergency budget over in the UK, and the markets were responding favorably to that as well. So there's a combination over there of spending cuts, a little bit of tax hikes, but the market in general thinks this is a good thing. Now, here in the US, we have our FOMC meeting happening this afternoon at 2:15 p.m. Eastern Standard Time when they give their rate decision. The market's not expecting any move on rates, but there is some expectation that they may change the language. Personally, I don't think that's going to happen. I think yesterday's housing data, which caused the sell-off in the stocks, is indicative of conditions that aren't necessarily that great. We're also going to get new home sales figures here in the U.S. this morning, and I don't think those are going to be too hot either. So just take a quick peek here. We're going to look at dollar yen. Just looks like we got a little bit of a downtrend going here, right ahead of the 90 level, and that's been selling off a little bit. Also wanted to mention the Canadian dollar. Let's take a quick look here. I want to look at loonie yen here, and let's look at this on the 5-minute chart from this morning. They came out with the retail sales figures, which were way worse than expected. They were expecting a decline of 0.4%, and they actually got a decline of 2.2%. So that came in worse than expected. You can see right here a little gap down, and it looks like it's a little bit of a runaway gap. So that's what we're seeing with the loonie as well. Now, oil prices have been down a little bit, so they've been taking a hit there. Conversely, we could take a look at let's look at the Kiwi versus the loonie, and as you can see, nice little run up here. Wow, look at that. In New Zealand later tonight or tomorrow morning, depending upon where you are, they're going to announce their GDP figures, and right now the expectation is for an increase of 0.5%, though there is some speculation that it could exceed that amount. Now, the economy in New Zealand has been humming along thanks to Chinese demand for raw materials. So they just raised rates recently in the June meeting. There's about an 80% expectation in the market that they're going to raise again in the July meeting. So we'll have to see how that number comes in. But real quickly, in the Eurozone, just take a look. It looks like Euro just flipped to negative here. It was a little bit higher. Let's look at this on the 30-minute chart here. How about that? Yeah, well, no, looks like it was down, up, down, trading in a band right here. And basically what happened is overnight, they're considering a bond levy on countries that are not within debt to GDP ratio targets. So obviously this brings back the idea of Greek debt, brings them back to the forefront. Now, business confidence in France decreased, but consumer confidence in Germany increased. So they're kind of a wash. But now there's some concerns over Greek debt again, and I believe the CDS has gone up a little bit on it as the fears of default are increasing. So that's what we're seeing so far today. We've got dollar weakness based on that housing number yesterday. That was pretty bad. We still, they were expecting it to be a lot higher based on the tax credit that just expired, and you know what? It came in just awful. And that's really a sign that shows us that the policies that we're pursuing here in the U.S. just may not be the right way to do this. Now, if you think about what's going on over in the Euro and the UK, they're all talking about austerity measures, about cutting deficits, about raising taxes. Not to the point where you want to discourage business. And in fact, in the UK budget, they actually lowered the corporate tax rate. Okay, but they're cutting spending, not raising it. And here in the U.S., we're doing just the opposite. Now, President Obama tried to reach out to Chancellor Merkel in Germany to say, hey, wait a second, you guys should be doing what we're doing, and he was rebuffed. I mean, pretty much everyone's saying, hey, you know what, that's not the way to go, pal. And the market's telling us that they agree with Merkel and not with what's happening here. So, this is starting to look like in the U.S. that things aren't really as great as we seem. And I mentioned that biflation the other day. If you go back and look at the blog there, I gave a discussion about that, about how we're still facing housing deflation here in the U.S. and how we could be seeing some commodity inflation as well. So this doesn't bode well for the economy. And then meanwhile, government's just throwing good money after bad at these problems without actually fixing them. They're just temporary, releases. So, this sets up for higher taxes down the road, whether it's for you or your company or your grandchildren or kids or whomever. And right now it's time to start saying, hey, wait a second, maybe we should take a look at what's going on in Europe. I mean, I shudder to say that when things are so bad here in the U.S. that we have to look to Europe as how we should be handling our economy. So that's what we're looking at right now. And we're going to see some volatility going into the FOMC meeting, but we also have U.S. World Cup soccer today, big game, and actually we could see a little bit of a lull in the action while this game's going on. It's from I believe 10 to noon this morning Eastern Standard Time, and then perhaps some volatility going into FOMC, and then depending upon what happens, we could see a move after that. So that's what we've got for today. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.